What are you seeing across the technology sector in how investors are responding to tariffs, but also how the companies themselves are communicating the impact?
Thanks, Ed. It's great to be back on. Well, the way we look at tariffs is they're actually very positive for the U.S. and very negative for the rest of the world, and you're seeing that today with ASML. But U.S. companies are mostly, except maybe Apple, mostly unaffected by the tariffs. A lot of them have local manufacturing. So you continue to see tech stocks lead the market. But what I think most people are missing is the revenue benefit to the U.S. So we're forecasting $300 billion of revenue from tariffs, which is really the run rate right now. And we're also forecasting that the budget deficit declines next year to $1.4 trillion only. That's only 4.5% of GDP. So nobody else is really looking at those numbers. It is good for the U.S. to collect revenue, pay down or have less of a deficit, which ultimately will be invested and help the economy.
Jay, I think the top story over the course of several days has been Nvidia, the world's most valuable company, now being more free in a limited way to sell chips back into China. It's a headline and it's a single company, but what does that signal to you on the policy side about how America will continue to trade with China?
Well, I think what you're seeing is that the Trump administration, notwithstanding the tariffs, which can be negative for a lot of companies, and trade restrictions, which hurt Nvidia 3 or 4 months ago, is that they are pro-business. And if you lobby the administration, they are open to changing policy. So ultimately, that's going to support the stock market. It's going to be bullish for tech companies. So they're just way more practical than the prior administration and way more pro-business.
You track a series of economic indicators, right? What is your projection on the net effect of this administration's policy? Do you see growth near, medium term, long term? Or what do you think we're being set up for going forward on the fiscal side?
Well, it's fairly complicated because tariffs are negative for the economy in the very short run because you just take, it's really like the sales tax, so you take buying power away from consumers. But the real issue is the Fed is misanalyzing tariffs. They're not treating them as one time. They're sticking with their archaic expectations theory of inflation that tariffs might cause expectations and spiral out of control, which we think is no longer the case. No longer the case.
Sorry to interrupt you. Let me ask you this. That's your view on this current Fed administration, right? I have to acknowledge that in the markets right now, there is movement across assets on the reports and speculation about what the administration may or may not do vis-a-vis Fed Chairman Powell, right? I think we see that in the markets. What do you make of that, a potential change? And I'd note for our audience, right, this is Bloomberg Tech. We talk about tech companies that are valued on their future earnings. So rates impact that equation, right? Take it from there.
Well, we actually have a differentiated view that if, in fact, the Fed chair gets replaced, of course, the stock market probably would react negatively. That would just be a buying opportunity for a couple of reasons. First of all, the Powell Fed has been tremendously behind the curve. They use a flawed CPI, so they're always about 2 years behind the curve. But also, a new Fed chair is not going to have super loose monetary policy. They just have normal monetary policy. And they have to deal with the existing board, which has the core board has 4 Democrats on it. So they're not going to be all powerful. They're not going to lower rates too quickly. And it's important to note that rates are ultra tight now. So we really, really need a cut.